When the final credit layer goes away, then everything breaks apart, and we're in a completely different world. I think AI goes away. I think all this stuff goes away. I've looked at AI's earnings and the fact that it's kind of getting stupider. It's not getting smarter. It's getting dumber.
If I'm right in my fundamental analysis and that we still have a long way to go with this market, then that argues for actually silver cooling off a bit here. Maybe it kisses 60, that sparks some profit taking and it cascades a bit. But, if silver crashes all the way down to 50, the silver miners will still be printing money, like literally pulling money out of the ground, real money. So I don't think that would be a disaster at all.
Recent turmoil in the precious metals markets has intensified speculation that a major turning point may be approaching. Silver and gold have both experienced sudden, forceful price movements, creating an atmosphere of uncertainty that is spreading across financial platforms and investment circles. These rapid shifts are not being viewed as routine volatility. Rather, they are interpreted as signals that deeper structural pressures, long discussed but often dismissed, are beginning to surface. As investors rush to make sense of conflicting narratives, sentiment is shifting from curiosity to concern, with many questioning whether the current system can continue to absorb stress without a more dramatic correction. Rafi argues that the speed and intensity of these price swings reflect an underlying instability that is becoming increasingly difficult to conceal. He highlights a significant political development in Europe, where Italy is pushing legislation to classify its central bank's gold holdings as the legal property of the Italian people. This move has placed the European Central Bank in an uncomfortable position. It cannot openly oppose the measure without admitting that gold remains a central pillar of monetary power, yet it also cannot agree without risking cracks in institutional control. According to Rafi, this tension reveals the contradiction at the heart of modern monetary policy. Publicly, gold is treated as irrelevant. Privately, it is treated as indispensable. This growing disconnect is shaping the broader narrative around precious metals. Central banks continue to accumulate gold at the fastest pace in decades, even as they attempt to maintain the illusion that fiat currencies alone support global financial stability. Meanwhile, rising volatility, expanding geopolitical uncertainty, and increasing debate over sovereign ownership of reserves are strengthening the perception that the era of effortless equilibrium is ending. From Rafi's perspective, the convergence of political interests, institutional discomfort, and market turbulence suggests that the system is entering a phase in which long-suppressed imbalances may finally be forced into the open, setting the stage for a much larger shift in how value and security are defined. Now, we present the clips from Rafi Farber's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
We are approaching the end game. I've thought we've been approaching the end game since 2008. So either, no, not in 2008. I was just waking up back then. But, what's the timeline? I can't, I don't know. I've been wrong about this so many times, but I mean, gold and silver are moving so quickly in both directions. The volatility is increasing. And the last piece of news that I saw is that Italy, whatever their Congress is called, is set to pass a law or a suggestion or some kind of statement that the gold that's owned by the Italian central bank, which is now subservient to the ECB, but it used to be independent of the ECB, that the Italian gold now belongs to the Italian people. And then the ECB is like, we're strongly encouraging you to not say that. And then the funny thing is that they're damned if they do. I'm talking about the ECB, damned if they do, damned if they don't, because if they say, no, you can't pass that, or if they express any kind of strong opinion other than that, we strongly suggest that this is not a smart thing. And then in the article I read on Reuters is like, quoting some ECB official saying, I don't even know what this means, but we discourage it anyway, because they have to pretend that they don't care about gold, but at bottom they know that it's what's backing them.
Right.
So if each country takes ownership of its own gold and hollows out the ECB in that way, it's basically what I'm preaching on the Endgame Investor. It's like you stack gold and silver not necessarily to make yourself rich or even to get through the end game or to make sure that your family's okay. All that is a side effect, and it's a good side effect. It's a welcome side effect. But
Right.
the point is, we want to hollow out the system because we don't want them to be able to inflate and spend money on lockdowns and pharma subsidies, maybe in 2013, 2014, something early on.
Hmm.
And Italy is a basket case. They have like the second highest debt to GDP in the world, I think. Maybe third highest, I think, is Japan, and then Greece, and then Italy. I think they have the third or fourth largest gold hoard, right? So once you see legislatures start to pay attention to gold and declare that they own it instead of a central bank, we're really getting to the core of the issue here because as we say, gold and silver are money. The only problem is people don't want to admit it. And so they say, oh, it's just a hedge against inflation, or it's a way to protect yourself from tail risk, or it's a way to protect yourself from chaos. But like, why is that? Why is it a hedge against inflation risk? Why is it a way to protect yourself? Because it's money. Because but but you say that you can say that over and over and over again, and it doesn't click until everybody starts seeing the value of their credit falling and falling, and they realize, well, this isn't money, it's not working, so I have to go back to money itself. And no matter how many times you say it, it's like you can only understand it instinctually,
Right.
right? Understanding it intellectually is one thing, but even if you could prove it, and I try to prove it, that's why I focus on the Misesian regression theorem or regression principle that all prices have to go into the past because they all have to be based on the past because otherwise prices don't mean anything. And if prices don't mean anything, you may as well be in a zombie apocalypse because if prices are meaningless and nobody knows what to do, and then they start eating each other.
Yeah.
So you can prove that intellectually, but even for people like us who understand it intellectually, we still think of the dollar or the Canadian dollar, or the shekel, or wherever it is you are. We still think of that as money because
Hmm.
we see our wallets full of that. Like you put gold coins in a wallet, you're like what am I in the 18th century? It doesn't feel like money. It feels like
Right.
I'm a whacked out crazy guy who's
Right.
like carrying a pouch of gold or silver with me, like why am I doing that? Like, that sounds nuts, and it
Right.
still sounds nuts to me. But intellectually, I know. But then when it doesn't, when the wallet full of digits, whether they're Bitcoin digits or fiat digits or whatever kind of digital data, whenever everything goes down and we don't have access to those digital whatevers or paper whatevers, then we're all going to start carrying around sacks of gold and silver. As crazy as it sounds, it's going to happen. Well, let's sharpen that,
Yeah.
okay? So first of all, they don't have any money at all
Mm.
because they only have derivatives and they only have credit derivatives. Even the dollar is a credit derivative,
Right.
but they don't even have dollars is just one is just like there's layers of credit. There's gold and silver, and then you start after gold and silver, you start the credit layers, right? So they have credit, they have your credit, but what they do is you give them credit level one, like dollars or Canadian dollars, that's level one. And then they take the dollars and they give you credit level two, three, four without telling you that it's credit level two, three, four because they're using credit level one to generate more credit for somebody else.
Right.
So they have like a ghost of your credit in either debt to you or stocks held by a brokerage. Even the stocks that held in your brokerage, a lot of them are lent out. So the credit that you think you have in your brokerage isn't exactly that level of credit. It's some higher level of credit derivative. So it's like you have the reflection of what you're supposed to have.
Right.
But then when it all comes crashing down, it's the currency itself that is revealed as the reflection of gold and silver that it actually is. And
Yeah.
that's the final piece that nobody can accept, not even us, because still we don't want to walk around with gold and silver in our pockets, but we're still intellectually aware that's going to happen.
Hmm.
So when the final credit layer goes away, then everything breaks apart and we're in a completely different world. I think AI goes away. I think all this stuff goes away. I've looked at AI's earnings and the fact that it's kind of getting stupider. It's not getting smarter. It's getting dumber.
Recent movements in silver have sparked renewed excitement, yet Lobo Tiggre cautions that much of the enthusiasm is being driven by headlines rather than new fundamentals. He notes that silver's pullback and its quick return to the upside have created a sense of urgency among investors, especially as mainstream outlets like CNBC and Bloomberg begin covering the metal with dramatic language. While these reports amplify awareness, Tiggre points out that they offer nothing fundamentally new. Physical shortages in London, elevated transport demand, and tight supply conditions have been known to metals analysts for weeks. He remains bullish on tangible assets and monetary metals, emphasizing that silver traditionally lags gold early in a bull cycle before accelerating sharply later. However, he warns that if silver begins outperforming too aggressively, it could signal that the bull market is nearing its final euphoric phase. From his perspective, a temporary cooling period, even a pullback toward $50 to $60, would be healthy, allowing the market to consolidate before moving meaningfully higher. Such a correction would not harm the industry. In fact, miners would still be generating strong profits, and long-term investors would likely gain another opportunity to accumulate positions at attractive valuations. Tiggre also acknowledges that broader macro forces are feeding into the current momentum. Expectations of a Federal Reserve rate cut, rising confidence that Kevin Hassett may become the next Fed chair, and renewed concerns about inflationary policies in the US and abroad are all contributing to increased demand for safe haven assets. He observes that if an AI-driven equity bubble were to deflate, the liquidity shock would temporarily hit all markets, including gold and silver, before triggering a powerful rebound similar to 2008 and 2020. Meanwhile, geopolitical pressures, rearmament in Europe, persistent inflation from global conflicts, and growing unease over financial system fragility are pushing both institutions and high-net-worth investors toward gold and silver as hedges.
It's kind of fun when, gold was breaking out and breaking out and breaking out. We had lots of gold headlines, and we talked about how that might bring more generalist investors in. It's sort of fun, but also a little bit scary to see silver headlines on CNBC or Bloomberg. There was a video that went around a couple of days ago about, will silver head higher? And it wasn't silver or gold bugs. It was one of these mainstream media outlets. I forget which one. But the funny thing is it didn't tell us anything new, anything we hadn't heard already about the shortage in London of physical and people flying silver around, all that sort of stuff that we've talked about for weeks now. But people got all excited and people want to know, what do I think about this video? And so on. Well, I think they're telling us what we already know. But to answer the question, I think I have two minds on this. On the one hand, I'm long, and despite people calling me Darth Silver and all these things, I own plenty of silver stocks. I'm very happy to see it long. I've never been a bear. I'm not sure I really want to see silver catching up with gold because, even your most diehard silver bulls will tell you that silver lags gold at first in a bull market and then more than catches up at the end. It's not the catching up part I have a problem with. It's the end part I have a problem with. My analysis is not technical, it's fundamental, and I don't see any reason for this bull market. I'm bullish on anything real that governments can't print. I'm particularly bullish on monetary metals, safe haven assets. If you, dear audience, think that the AI valuations in the market are a bubble, and that bubble pops, I think that would create a lot of demand for safe haven assets. As we all know, if the market actually crashes, I'm not just talking, rolling over and politely, slumping down to more reasonable valuations. If there's an actual crash, everything gets whacked, absolutely everything, including gold at first during that initial liquidity crunch, and then it goes soaring. If that happened for anybody who gets it, that could actually be an absolute gift on the part of the market. That sphincter's opening moment, like in 2020 or 2008. I wasn't in the market in 1987, but I understand it was a similar thing, right? The wrong things go on sale, and that is an absolute, the best times you could have bought gold in my career or during the crash of 2008 and the flash crash of 2020, both of those saw screaming rebounds afterwards. So we might see something like that if the AI bubble bursts. And if not, broadly speaking, I think the writing is on the wall of the inflationary agenda in the United States. Even if you agree with Trump, the Goats did not save us $2 trillion. Tariffs are being walked back and negotiated down. So I think the agenda is highly inflationary. Europe's rearmament is highly inflationary. Russia's war is highly inflationary. Even China, at long last, has finally got some consumer price inflation going again. So, that's bullish for monetary metals. And then to sort of the not just the geopolitical risk, but the awareness of how rickety the financial house of cards has gotten. I think, I can't prove this, but I think it has a lot of mainstream investors, deep-pocketed, not just institutions, but individuals, family offices, that sort of thing, saying, maybe I should hedge with a bit of gold and maybe some silver too. So all of this is very bullish, whatever happens long term. And I feel a bit odd saying this when we're at or near record prices in gold and silver, but there's actually not a very strong case for gold going down. The strongest case we could have made recently was, gold went screaming up to 4,400. That was too fast, and it has to be a correction. And then the question was, would that be a peak or would it be a plateau to another high later? And I wanted it to be a plateau, but Mr. Market doesn't care what I want, right? So we had to see. And I think it's pretty evident right now. It certainly wasn't this kind of peak. It wasn't a 1980 intraday type peak. It looks like 4,000 is the new 3,000, and we're consolidating before moving higher. So overall, bullish all around. It's a crazy thing for me to say at these levels, but that's the way I see it. And sorry, let me come back to the point of your question. If I'm bullish on gold and I'm bullish on anything real, how can I not be bullish on silver, right? That having been said, if I'm right in my fundamental analysis and that we still have a long way to go with this market, then that argues for actually silver cooling off a bit here. Maybe it kisses 60, that sparks some profit taking and it cascades a bit. But if silver crashes all the way down to 50, the silver miners will still be printing money, like literally pulling money out of the ground, real money. So I don't think that would be a disaster at all. I think to the degree that something like that put the silver stocks on sale, again, that would be an opportunity. And what might make that happen? If it's true that, demand out of India is, and front running of tariffs and critical minerals rebalancing, this sort of thing has put a squeeze on the physical markets, I think that rebalances. Again, I'm not a bear here. I'm not arguing against silver, but I think that would be a good thing. That would set the stage again for consolidation before moving higher. And if that's not what happens, if we're really at that blow off top, the good news is, okay, everything will go higher. The bad news is that whenever it, peaks, that we're likely then to go into bear mode for some time. So yeah, again, Mr. Market doesn't care what I want. I would prefer it wasn't the blow off top just yet. But if it is, if we start seeing things going parabolic again and gold confirms silver's move, then actually I would deploy more cash. As crazy as it sounds to say, yeah, I'm going to jump on all-time highs, if we're looking at that blow off top, then yes, I would put more money to work trying to profit on that. And I mean in the stocks. Bullion, I always buy on the dips. That's my savings. I'm always willing to accumulate bullion. That's not what I'm talking about. I'm talking about, speculating for hockey stick gains on the stocks.
How much of what's happening right now, maybe in the last couple of weeks, do you attribute to, it seems like a Fed rate cut is now more likely. It was questionable for a couple of weeks there, but now the betting markets are really saying that, we're going to get a Fed rate cut most likely in December. And also, it seemed like this leak about it's Kevin Hassett, who is likely to be the next Fed chairman. Betting markets have him over 80% chance of being the next Fed chairman. How much of that, with respect to the Fed and Trump and everything, is what's fueling the push, especially for silver higher?
I got a yes and no on that. Clearly when those things happen, the headline about Hassett came across, we saw an instant response in the markets, the broader markets, as well as gold. I don't remember silver wiggle that day, but I do remember that it was good for gold that day. And I think silver was sympathetic. But then things go back to the way they were. And at this point, that Fed rate hike, as you say, that the market's in near certainty.
In the months ahead, silver is poised to enter a phase in which structural tightness and global uncertainty begin to reinforce each other rather than act independently. As physical stockpiles continue to thin and industrial demand remains firm, even a modest shift in investor sentiment could accelerate the imbalance between available supply and new buyers. This environment creates the possibility of sharp bursts of volatility, brief setbacks followed by aggressive recoveries, as major funds, sovereign entities, and private investors adjust to the reality that the metal is no longer quietly accumulating pressure beneath the surface. Any temporary pullback would likely serve as a reset point rather than a reversal, allowing the market to stabilize before the next wave of buying pushes it higher. As more mainstream financial institutions acknowledge silver's strategic importance, additional inflows could arrive faster than the physical market can absorb. If macroeconomic conditions worsen or confidence in monetary policy erodes further, silver's role may shift dramatically from an alternative investment to a mainstream defensive asset. In such a scenario, capital could begin moving into the metal, not gradually, but in sudden decisive waves, as investors seek safety from currency weakness, geopolitical escalation, or instability in equities. This transition has the potential to push silver into a sustained upward trajectory, where once ambitious price targets become realistic milestones. The next major move, therefore, may not simply be another rally, but the beginning of a broader revaluation, one driven by fundamentals, scarcity, and a growing recognition that silver occupies a far more critical position in the global system than markets have acknowledged for decades. Let us know what you think in the comments. And if this video offered new insight, don't forget to like, share, and subscribe for more updates on this unfolding monetary revolution. Thanks for watching.